I just wanted to have a conversation or create a video showing the team how I pick my stocks. Uh, I'm going to make it brief and it's going to be high level, but this will probably give you ideas on my methodology. And if you have a better way of picking stocks, please feel free to share that with me as well. My methodology is I go from a macro perspective to the sectors and industry. And I can go more deeper than that, but for the sake uh, of this video, I'm just going to stay high level. Okay. So I use TD Ameritrade and I use E-Trade just for the tools that are in both platforms. I normally have most of my capital in Robinhood only because it's easier for me to trade Bitcoin and regular stocks on that platform without paying that much for commission. So without further ado, the first thing I do here on TD Ameritrade is I go into the research and ideas part of the platform over here, and then I go to sectors and industries, and I click sectors and industry, and it will bring you to the sectors and industry landing page. I change the period of performance to 1 year usually, and it just shows me the performances of all the sectors. Obviously, as you can see on my screen, the IT industry has done really well the last year. So if you had money in the IT, maybe an IT index last year, you probably would have doubled your money. Um, and then I go down to the sector characteristics and I pick performance, and it shows you the performance of the sectors in the last 5 years, and I click 5 years, and that way kinds of puts in hierarchy as far as which sectors perform the best. And as you can see here, it's obvious that the IT industry has performed better than the rest of the industries. But you can also deep dive and find some room for opportunities in different industries. But I'm not going to do that because I want to make this a quick video. So now that I know that the IT industry is the data point that I want to research more into, I go into um, the back into the research and ideas, and I click on the screener. So this screener is almost like a filter for all the stocks that are out there, and you can screen the stocks based on sectors and industry, valuation, fundamentals. You know what I'm talking about, but when I show you, you understand it even more because we learned a lot of that at Dr. Defon's class. I click on stocks, and then I click on create a screen, and I use all the information data points that I'll let the data drive me. So I go to sector and industry, and remember we picked information technology as our data point. So I pick information technology, scroll down, I go into fundamentals, and I want the return on equity because that's what Dr. Defont told us. As you can see, it will tell you how many companies are in IT in TD Ameritrade, and I want a return on equity of 20%. As you can see, it filtered that down to 36 companies. So I can either review all 36 companies, which I'm going to do, or I can filter it more. For example, a lot of times I tend to want to invest in mid-cap companies, and I can just play around just to see if there are any mid-cap companies that have a return on investment of 20 to 30% that are in the information technology sector. So I can do this by going to valuation. Oh, I'm sorry, not valuation. By going to market capitalization, and then I'm going to pick just to see if I can get something in mid cap. Oh, and I have 6 companies that are has a return on equity at 20 to 30% in the IT industry. That's what I want because I believe market capitalization is like a tree. If you have a tree that's fully grown, you don't have that much room for growth, in my opinion. But if you have a tree that's, you know, just growing, but it's past the infant stage, you have your risk. You're mitigating your risk. So I'm gonna see what these 6 industries are. These 6 companies are, and let's see if we can make some money. So here you go. You have Alliance Data Systems, Egg House Systems, and I see, so some of these I've heard of some of these before. Some I haven't heard of. So what I'm going to do is I'm going to stack them based on the ones with the highest return on equity. So the one with the highest return on equity is SPMYY, Sparent Communication. I've never heard of this company before. That's why I'm going to go to E-Trade to look at the balance sheet, look at the income statement, look at the statistics, and look at the trend line as far as earnings concerned. So I go over here. Okay, SPMYY, that's their ticker. Let's put that in here. SPMYY. Okay. All right, I look at this company. Let's see how they've been doing for the last 5 years. Well, it looks like in the last 5 years they've been trending upward. As you can see, their price to earning is 24 times. That's times the earning per share. So that tells you that it's not overvaluated. You're not paying too much for the stock, and it's a mid cap company. It's only $15 a share. That's good. That's good so far. This trend line is good, but you also want to dig deeper into this stock. So that's when you go into the fundamentals. Actually, the first thing before you go into fundamentals, you go into your earnings. Earnings right here. And I see that they made money in 2007, and they have been trending upwards the last 3 years as far as their earning is concerned. So the earnings per share has been going up the last 3 years. I suspect this company may or may not be an American company, but I'm just going to double check the snapshot and see if it is an American company. I don't think so because they don't have that much information in their earnings. Okay, I'm right. So it's a British company, which is not bad. For the sake of argument, let's deep dive more. I don't like going with the British companies only because I can't see as much as I want to see in their earnings statement. But let's go back to the earnings statement. They seem like they've been making money so far. Their earnings per share is going up. But let's look at their fundamentals. So as far as their fundamentals is concerned, their debt is really low. The price to earning, we talked about that earlier. The cash flow seems pretty decent, and the return on equity seems pretty good. So it's a company that I think that I would invest in. The numbers look good, but let's look at the balance sheet. Okay, we look at the balance sheet. It seems like their total earnings. Let's see here. Here's their total assets. Total assets look good. It's been going up, but it was flat. It was flat from 2006 to 2018. The assets was flat, but that's great. That's not bad. Liabilities. And let's see what the income statement looks like. The balance sheet so far looks good to me. but let's see what their earnings look like. I'm sorry, I'm sorry, the income statement. And as expected, based on the return on equity, the net profit, the net income, the net income after tax, the net income right here, it seems to be growing the last few years. They had some issues first earlier, 5 years ago, and it seems to be going up so far. So I can invest in a company like this, and my risk would be low. I'm gonna try an American company. The next one down, the TTEC. So let's see if this is an American company, because I can get more information from the American company only because the SEC requires them to provide more information. And if you look at the 5 year trend here, it looks really good as well. It has dips, it has a bunch of mountains and valleys, but overall, the last 5 year projection has looked very well. The price to earning is pretty decent. And in this case, it looks like they are paying dividends. That's even better. Let's see just real quick to see where the company is from. Okay, the company is from Colorado. That's good. Now again, let's look at the fundamentals. We already know what the return on equity is because we did the filter by return on equity. So the return on equity on this one is 24%. Price to earnings seems pretty good. The debt is okay, but you know, it seems like they do have a relatively significant amount of debt. So it's a company that I'll look for. I'll look out for that. But let's look at the earnings. The earnings seem decent. This I wouldn't worry too much about a 2021 dip only because we're in COVID. But you get the idea, you know. So that's kind of how I filter. Any of these two stocks will be good. I'm gonna try one more. I'm gonna try this. Let's see. I'll try the eGov just to give you another perspective. eGov. And you can see that the earning keeps going up. Let's see the snapshot. This is not a stock that I will buy only because, well, maybe it seemed to dip in 2019. Not sure why, and it seems to be rising back up. So um, the P&E is good. Return on equity is pretty good. And I'll just check the fund. Let's check the income statement. The debt is really low here. And let's see the balance sheet. The balance sheet looks good. There seems to have a lot of cash in hand. Receivables is flat, which is good. And then let's just see the total asset keeps increasing. That's good. Liabilities, there's nothing too crazy about that. But this is a healthy balance sheet. I think you guys will. I think it is. Anyway, I'm pretty sure it is. And then I look down to the income statement and the net income. Well, it went up. It's all over the map. So for whatever that's worth. So anyway, that's kind of how that's kind of like the analogy that I use to pick my stocks. If I was to pick any of these stocks that we looked at, it would be SPMYY because the balance sheet looks healthier than the rest of them. So that's what I wanted to share with you guys. If you have a better idea, please feel free to share with me too.